folks, I'm back. It is Wednesday, March 18th. I had to take a break yesterday. I got kind of emotional the other day. Sometimes you got to do that. You got to step back. You got to put some distance. I talked about the body's I did a video on the body's reaction to stress. And it's something we all, as human beings, as organisms, we just have this, our brains react, physiologically, it does stuff to the body, and you got to short circuit that. Otherwise, it's going to take over everything. Your emotional state, your physical state, it's no good. So you have to have techniques to short circuit that. I use a lot of cold therapy. I use a lot of exercise. That's big for me. Cold therapy, cold showers, walking outside in the cold with just a t-shirt on and just sometimes taking a break, stepping away. Anyway, let's talk about what's like. Today was a big day. Every day's been a big day, and the news, as you know, has just been unfolding in such rapid fashion, and it's scary. It's frightening, man. Now, I did that video, that crazy rant, and it wasn't crazy, I guess. I did that rant on Monday about they're destroying the economy. Now, I guess they feel justified in what they're doing in an effort to try to halt the virus. We see the numbers, we see the figures. I don't want to get into a whole discussion of this, but the economy is being destroyed. You're going to literally have industries, bankrupt entire industries. I don't know if this was the right way to go. It certainly seems like, one of these to kill the infection, you got to kill the host. I don't know. Let's talk about markets today. And by the way, before I get into markets, let me say this one thing. I have such great people with me, such great subscribers. I just want to, my hat's off to all of you. The people who are with me, my subscribers, man, like a rock. They are, I have a group now. I went through a period, and it's kind of cyclical, but I spoke about this period back in late 2018, which was nothing like what's going on right now. And how people panicked and took off and canceled and this and that. And now, the group that I have together now, they are the strongest, they are the most resilient. I get so much back from them, and I want to thank all of them personally. It is a pleasure working with these people, and I've had a lot of new people come on board, and they're really excited, and they're very positive, and they want to learn, and that's fantastic. So I had to say that. So let's talk about what's going on. And there's some really interesting things going on. All right, number one, today I sent out, the market was plummeting, the news was dire, it was horrible, and there is some positive stuff going on, which I'll try to get to. But just from a market perspective, from a trading perspective, there's a couple of things that I said today. Number one, we got to see a fiscal package come out, and we have to see what the size of it is going to be. Now, they're talking about over $1 trillion. Some are already saying that's not enough. You're going to need $2.5 trillion. If this is, JP Morgan came out today and said they're looking for a 14% contraction in the economy. Something like that, you might need $4 trillion. Okay? But we'll have to see what that package is, number one. And that's going to include checks going out to people. It's going to include bailouts for certain businesses and industries. It's going to be a whole range of things. Trump suspended evictions today. These are steps. These are positive steps. You don't want people losing their homes because of these shutdowns that have been put in place. Commerce completely shut down. So these are, and when these steps came out, when the media reported these, we had that bounce late today because the market was down over 10%. Now I said today 2346 was the 2018 low in the S&P. And I said technically if we break through that, it's probably a buy. Now we went through that pretty substantially intraday, but we closed above that. So that's a good sign. All right. Now the market is giving the benefit of the doubt here to what the fiscal package is going to be. And again, we have to see that. The other thing that I find fascinating going on here, and what is the market down something now like, I don't know, 38% or something from the high. 10-year Treasury yields all the way back up to 1.2%. A couple of days ago, they were at 0.3%. And everybody's wondering what is going on with the Treasury market. It has been a massive sell-off. We've seen a massive sell-off there and a backup in yields at a time when you would think, because Treasuries have always been the safe haven of last resort, anytime the market was tanking, you'd see Treasuries rally and yields plummet, but we have seen over the last 3-4 days the exact opposite, and nobody could really come up with an explanation for that. I have postulated two explanations. One is the Treasury market is now discounting a major fiscal stimulus. Now that's a popular explanation, and that may very well be the explanation. The other thing that I personally think is that there's been reported incredibly illiquid conditions in the Treasury market. The only buyer has been the Fed, and the Fed has been buying by lowering its bids. In other words, that is price setting lower of the Treasury securities, which essentially is raising the interest rate. Now, why would the Fed do that? It seems ridiculous, and it seems contrary to what they're trying to achieve. And my answer to that is, I have no idea why the Fed would do that. You could chalk it up to incompetence. You could chalk it up to they're trying to get the best deal, the best price for taxpayers. And I know that sounds wacky, I know that sounds crazy, but look, we've seen so much out of the Fed now that is incomprehensible and really borders on mismanagement that I wouldn't put anything past them at this point. So anyway, we've seen yields back up. And I suspect if we get a big fiscal package, if that is passed, then we've probably seen the peak in the Treasury market and the bottom. And wouldn't that be funny now? I mean, after they cut rates to zero, you know the Fed, they follow the market if they're going to have to start raising rates at some point. But I doubt that's going to happen anytime soon. So we've had that. The dollar. Let's talk about the dollar, because I know a lot of you would be saying to me, Mike, you have been bearish on the dollar for so long. And I admit that this move in the dollar has gone beyond a level that I thought we'd see. However, if you give some perspective here, if you step back and you look at it with some perspective, and really we're in an environment now, we're in a move now which is unprecedented, and we're hearing all this talk about a global dollar shortage, and all financial systems throughout the world and all clearing systems throughout the world, there's a shortage of dollars. That's the story we're hearing. And if you look at the dollar's rally in the context of this unprecedented dollar shortage that supposedly we're in right now, the advance in the dollar, the rally in the dollar, the appreciation in the dollar has been very muted if you think about the storyline here that it is an unprecedented dollar shortage. So we'll have to see, and I'm very curious to see tomorrow's weekly H.8 Fed release, which shows the Forex swap lines, the central bank liquidity swaps. Now, if that dollar shortage is real, we should see that those swaps have gone up by billions, maybe tens of billions. If it has no change at all or very little, a few million, a few hundred million, then the story is bogus. I'm sorry. And all this is a panic-driven, zombie-driven portfolio shift from people buying into this story. But listen, I'm staying on the sidelines at this point. I'm holding back judgment until I see that report tomorrow. So where are we in this whole thing? Clearly, the economy is going to take a massive hit. We have erased the entire Trump rally in the stock market since he was elected. A very significant amount of the economic hit has already been discounted by the stock market. The question is how much and how big of a hit. We don't know yet. We have to wait for the fiscal stimulus. We're going to see what that is. And I think at that point we can make a better judgment. But make no mistake about it, that at this point, a sizable discounting of the economic hit has already been done by the decline in the stock market. Now, we may have more to go on the downside. Who knows? Maybe the economy contracts 20%. But right now, I think we stabilize at these levels. Anyway, let's see what happens tomorrow. Have a great day, everybody. See you tomorrow. Bye-bye.